Well, concerns about the global economy pressuring the markets again on Wall Street, with the situation in Europe and Asia weighing heavily on the market today. Are we in danger of a double-dip recession for the economy? Joining me now to talk about that, my special guest for the entire hour today, Commerce Secretary Gary Locke. Also joining the conversation, David Malpass, president of Encima Global, a newly announced Republican Senate candidate for New York, as well as Brian Belski, chief investment strategist with Oppenheimer. Gentlemen, good to have you on the program. Thanks very much for spending the time. Secretary Locke, let's kick it off right there. The economy, we know the worries, and we see that manifest every day in the stock market. How would you characterize where we are right here?
Well, it's obviously a fragile economy, and we're really feeling the effects of what's happening in Europe, and as well as some of the concerns on Asia. But the fundamentals of the United States economy are strong. We're seeing consumer confidence up, manufacturing orders up, production up, hours up. Even in the employment figures have been up for 5 months in a row. This last one, obviously May, private sector employment not as much as we would have liked, but actually we've seen growth. And the GDP numbers for the 2010, certainly in the positive territory, perhaps around anywhere above 3% growth compared to last year, or actually 2008 when it was negative 6% growth.
You know, we are seeing better numbers for sure. You can't argue that because the numbers are there. But David, the Friday jobs report, it was only 41,000 jobs created from the private sector. Much of the increase in that very good-looking headline number was government hiring and census workers. What is it going to take to get businesses to create new jobs?
Typically, small businesses create the lion's share of the new jobs, and they're not doing it right now. So I think it would help to have more stability in the Washington policy outlook. That means the tax, we're facing this huge tax increase at year end, so that's overhangs. And also the regulations coming out of the health care bill, out of the financial services bill. So those all are negative factors, and above all, this credit crunch. People like to say it's a lack of demand by small businesses, but I know a lot of small business people who wouldn't even dare go into a bank because they know they'll get turned down. So that problem, I think, above all, could be addressed by Washington and hasn't been.
Secretary Locke, you no doubt have heard these issues before from business leaders you've spoken to. What about that? Higher taxes. People are afraid higher taxes going up next year. Big business, big government in business. How do you respond to things like that?
Well, first of all, the administration is pulling out all the stops on trying to revitalize the economy, get it going again, and we're actually seeing positive results. I mean, what we're talking about in terms of the tax increases are ending the tax cuts for the wealthiest Americans, and the Recovery Act actually had significant tax cuts for 95% of working families across America, putting more money in their pockets. And then on the health care front, actually small businesses are going to be rewarded. Right now, small businesses can't deduct or take a tax credit on what they're paying for their health care costs for their employees. So under the Health Care Reform Act, small businesses have no requirement to provide health insurance, no penalties if they don't provide health insurance to their employees. But if they do, they will now be eligible for a tax credit on what they're spending for health insurance for their employees. So we're really trying to do a lot for small companies and entrepreneurs, which is really the generator of all growth in our country.
We'll come back to that in a second, David. But Brian, investors don't seem to be buying any of this. Every day we come in and there's another upset in the markets. What is it going to take to get the trust back in the American market?
Well, a couple things. There's a lot of headline risk right now because of what's going on in the Gulf and what's going on in Europe. People just don't feel very good about buying equities. One of the things that Secretary Locke talked about earlier was that the fundamentals of our economy in corporate America almost to some degree have never been better. And part of the reason is because corporate America, I like to say, has been in the bunker. They're not hiring. They're trying to garner as much cash as they can. And so therefore we need to start to see more hiring for people to feel better, because remember, even though the leading parts of the economy, that being personal income, business spending, consumers are feeling a lot better, we need to see that optics continue to improve for that spending to continue. So we would like to see a little bit more incentives for the small business side of things to start hiring people. It's really the hiring engine that gets things going. Yes, the trajectory of employment is heading in the right direction, but we need to see more job gains.
Brian, do you think corporations are pulling forward earnings into 2010? recognizing the tax situation changing into 11, and also individuals pulling some income forward?
I think they are. The individual side of things, we need to see a little bit more clarity with respect to what's going to happen with the Bush tax cuts, with respect to dividend taxation and cap gains. That's a real issue with respect to the individual investor. On the corporation side of things, I think earnings are coming in actually a little bit faster than most corporations thought, because business is starting to come back and they're being forced to hire people, but we need to see a more consistent trajectory of overall hires.
Well, and what we're seeing actually is that a lot of companies, because they had put their employees at half-time, three-quarter time, they're actually bringing the hours back up, and they're now even moving to overtime. And once you start having maximization of the existing workforce, then those companies will then move to hire additional people. But the reality is, for the last 5 months, we've seen positive job growth in the private sector. Forget about the census. We've actually seen positive job numbers, not as much as we would like in this last month. But I also think that we have tax incentives out there. I mean, obviously, if a company is not ready to hire, they're not going to. But we do have tax incentives that was passed on a bipartisan basis, tax incentives for people to accelerate that hiring, tax incentives for write-offs of their capital expenditures, as well as payroll tax forgiveness.
I got to ask you one quick question. I know we got to run, and we're going to continue talking about the issues that you brought up, David. But, you know, it just seemed like that report on Friday was such a shocker, given the fact that so many members of the administration were out talking so positively. The president on Wednesday saying, look, this is the job market that's turned a corner. You know, you had Christina Romer out there saying, and then, you know, we were looking for like some blockbuster number. Do you think they overhyped it? I mean, what the heck was going on with everybody out talking about how great things were, and then we only had 41,000 private sector jobs created?
Well, actually, I think I saw a report saying, going back through many, many decades, that when you actually have census workers employed, especially in the month of May, that competition for part-time workers actually leads to sometimes not many jobs in the private sector. So again, I mean, that's a strange anomaly. Yeah.
I think that's right, and you did see people's hours lengthen, and a lot of part-time workers moved to full-time, which is a positive. So you've got some progress going on there, and the census, to an extent, just crowding out a little bit of the private sector hiring that might have been done in the month.
All right, great, gentlemen. Thank you.